The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman here on this 18th day of September. My pleasure to be here Monday through Friday, noon until 1 p.m. 877-927-6648 is the number to call. Wow, a ton of stuff to do. Let's do this. Yes, the Dow just made its leg D in the daily chart. I'm watching very closely to see if the MACD, the moving average convergence divergence, is going to cross positive sharply. If it does that, then there's no question there's a possibility now that the Dow could go straight to 26,616, the all-time high. The weekly chart is still very positive, both in the MACD and stochastic. Stochastic in the daily has just gone to 83%. It was way lower earlier. It was like 3 days ago. It was in the 60% area. So I'm watching this very closely. Yes, we will get stopped out on our short position, very, very tight stop. But I don't know what to say because leg D is what we wanted. Leg D is what we're getting. It is still under a level that would. Why is my throat getting stretchy? There it is. It is still under the whole 26,200 area. It's in that right now. So it's under 26,300 because I really think if it hits 26,300, I mean, what's to stop it? Because the MACD will then cross positive. Stochastic will be in about the 85% area. There's nothing to stop it really from testing the all-time high. And all the indices except the New York Stock Exchange, NYA.X. The New York Stock Exchange is way below. So that's really what we have to follow. The New York Stock Exchange made its high also on January the 26th at 13,635. It's down at 13,098. Take a lot of points to get there. And it's just once gone above the gap low and gap high. That was at 13,050 the week of the 9th of February. Remember, the 9th was turnaround day. Now let's go through a couple of things. If you look at the S&P, the S&P is having a very nice turnaround. This becomes new leg C underneath the 2916.50 high that was made. Here again, you've got, when there are formations that repeat in all the different indices, and then you see the same thing in some of the stocks, and then you see the same thing in some of the commodities, you have to say that's the pattern de rigueur, that's the pattern du jour, that's the pattern that we've got to be following. And it turns out now, because of the breakout today, that this cup formation is really important to monitor. It does suggest the MACD hasn't crossed positive, it's turned up. In a W formation, the stochastic still only at 69%. It's been the laggard, but if there is a move in the S&P above 2916.50, that weekly chart is probably not saying it's a new leg G. It's probably saying that's an old leg G. It's a brand new leg C. All right, monthly chart is still very strong in all the indices, as we've been mentioning. This is an important moment. If you look at the QQQ, which has been lagging very poorly, it's got the same kind of candle as yesterday, except that this time it's green rather than red. It's way under, I shouldn't say way under, it's visually way under the 187.52, August the 30th all-time high, little doji candle peak after it went down to $187, what, not even 7%, it's more like 5.25%. So that's really nothing much that we can look at here in terms of other than the H pattern. And this big move up here says if there is a close above 183.81, yesterday's high, and then it even manages to push by the end of the day a tad higher, that would say you've got an equal measure of a red candle followed by a green candle with a higher low and a higher high. That would be a positive against the negative lowercase h pattern. Let me just see. I think I drew it somewhere. No, I didn't. Okay. Now let's go to the QQQ. And the QQQ is, oh, that's where we did the QQQ. IWM. To fail, all of them need to take out yesterday's low. And that would be a grievous failure for sure. IWM. Russell 2000, I've got a couple of questions and again, a ton of questions lined up, emails. So this is the weakest, the IWM. And you remember yesterday, I said to subscribers today that it was on my list on Monday based on the Sunday chart that I had, which said there is a very strong chance that the 169.70 level of the 200-period moving average wants to be tested. But I had this conflict to say the Dow didn't need. In the Chapman wave methodology, it was highly likely, 95% likely, that it would try for a leg D and not fail at a peak C. All right. So IWM is lagging. And I didn't want to have this mixed scenario where maybe the Dow rallied and dragged the others up. Although 30 stocks we saw yesterday, the majority of stocks went down, dragging the Dow lower, even though the Dow was the strongest of the indices. So today the Dow is up 0.62, S&P is up 0.67, QQQ is up 0.90. Yeah, 0.90, is that right? No, can't be. Let me just see what it is. QQQ. Yeah, 1.19. 1.19, and nice reaction to the selling pressure of yesterday. Now, within that context, look at this. Gold was up quite nicely, actually, and now it's down 1.9. And now I'm finding, I think I've got a real time. Someone tell me, do you have 1.9 as the current price of the contract, the continuous contract? I'd like to know if I'm in real time here. So that's gold is just sitting on the 9-period moving average. In fact, a tad under it. Silver is a tad, just a candle that's a tad stronger, but it's at 14.22, up 0.002, still stuck in this range. The dollar keeps getting, it looks like it's about to get hit hard to make that H pattern make it more vulnerable in this H pattern right here. So really going to a trough C and now a leg D. And now the MACD is starting to make that W formation that says any good news with the dollar going from 94.50 down a penny right now to 95.20 over a couple of days, but it needs that kind of speed. It can't be more. It can't hold out for 2 days without moving. It's got to be real soon. Would say that the divergence between the stochastic holding pretty well at 22% and the price coming down to a low is I'd say it's a positive divergence, but once the 94 gets cracked, the 93.78 200-period exponential moving average will become a magnet. Very important levels, but I basically would say to you, we're trading in a range. The dollar and the and gold, and look at the euro. As we go to our first break, the euro is moving quite nicely at 1.68. It hasn't broken out for that leg C. It might be coming. I'll talk about it as soon as we.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, so we're back, and what we're looking at here just real quickly is the E-mini, S&P E-mini December contract. A 2-minute chart, a peak E, down arrow. 5-minute chart, a peak E. I prematurely put in a down arrow because the bar is still underway and need a little more time for this, but it has gone under the 9-period moving average. The MACD's turned down, stochastics turned down, and a leg D in the 10-minute chart. That's what you really have to wait for. If you're trading these things, have patience, wait for your 10 minutes to be confirmed by the 2 and the 5. That's like having a 120-minute chart, daily chart, and a weekly chart, and you get your confirmation. So, yep, might not work, but everything about this says this is where we're going to have a little bit of a lunch break in the E-mini as it pulls back some. I think it might hold the between 211 and 210. That should be good support. We'll see if it takes that out. Then you've got to be a little bit careful. Meantime, if it breaks above 29.18 at any point in the next hour, that's very good action. All right, here we go. I'm going to go to the euro dollar, EUR/USD, has got this cup formation. Well, it's actually a double formation. This is a very unusual formation. First, it makes a V-shaped pattern. All right, here we go. See the V-shaped pattern? I call this a gull wing. Look at that. It's half an arch right there and half an arch potential right here. So this gull wing, like the 55 Ford Thunderbird, was it the Thunderbird? And now the Mercedes has the same, and the Tesla has the same. No, it was a Mercedes gull wing. That's what it was. Sorry. So there's this gull wing right here, but it's stuck. And it says to me, remember I did this yesterday, I showed that there was a range at the upside of the euro between about 1.17 and 1.176-ish, and that's kind of stuck. And that you can see the weekly, so it'll be a sudden dollar decline that could help it, news event, whatever it is. We'll see if that's going to happen. And here's this cup formation. The gold ring has turned out to be a double U in the daily chart, yes, of the dollar. And if you go to the USD JPY, which at one point earlier in the year was more or less following the dollar in trend, Now it's, in a way, it's a little bit independent. It's actually closer to the euro. It's making a nice U-shaped pattern. It's at 113.30, 112.30. And if I look at this, the high that was made on the 19th of July at 113.32, can it get there? You know, this is almost like looking at the weekly and monthly charts of the Dow, where it made that high on the January the 26th at 26,616, pulls back to the 23,300s, and now it started this inside acceleration to the upside. Yeah, it's more like a cup formation. I'll draw it. So for all I can say is, yeah, it looks like the yen, USD/JPY, the yen in leg D is going to be, it has to hold 111.50 support, 80 cents lower from here. If it breaks under that, that's going to be a negative and say, okay, now it's sideways. But if it goes to 112.65-ish, there's a real good chance that it'll try to test that high. Very interesting. And that will make leg D, the missing leg D that we've been talking about for so long in the yen's weekly chart. And that will also break out that monthly, very, very long-term trend line decline from 2015 high, with each series of lower highs making a trend line, and we're testing it right now. So this is going to be a very interesting period for currencies. What am I missing? I'm missing crude oil, and I believe that crude oil is right now at 69.43, pull back down 70, down from the high today of 70.17. It's at 69.42, so it's giving back quite a bit. Nice candle, holding the 9-period moving average. Remember, Fred had emailed to say he's in a buy mode for crude oil. It should go higher for a little while. Hey, we'll see what happens here. But it needs to break 71.35, and then it's just a hop, skip, and a jump to test the 73.54 high of the 6th of July, the week of the 6th of July. And it made a peak D in the weekly already. Okay, now I'm going to do a little free thinking here because I just need it. Tomorrow I'm going to be doing my show at 8 o'clock, 8 to 8:30, and then Jason will take over. It'll be recorded for my noontime show. A couple of things are going on. Look, the FVX, and this is what I spoke to, at least I showed subscribers, we went through this in great detail. I said the FVX is looking very good, the 5-year, and it has basically been leading yields. It's the inverse of bonds, right? So these are the yields. This is only a leg C, and it broke out in the left side, right side price, Chapman wave price time match, and there was an inside, oh, I put that in and I took it off by mistake. Right there, there's a Chapman wave inside wedge target line. It's pierced that. And that'll be intraday support at 29.17. It's at 29.31 right now. I believe, yep, it's a hop, skip, and a jump to go above 29.41. 29.41 will start leg C officially in the weekly chart of the 5-year and the monthly. And this is unbelievable. Look at this chart. Squeeze, squeeze, squeeze. Here we go. Squeeze one, squeeze. Okay. Look at this. And this is what I show subscribers. This bowl formation, we saw that back in 1999, December, I think it was, when the XAU was somewhere in the 44 area. That's the gold index. And it made this cup formation, and then maybe it was even April that it made the low, but in that period, and it made this bowl formation and then broke out significant. This says to me that the 5-year at 2.92 has a target in 2018. It might take longer, I'm just saying 18. By the first month, by January of 2019, it has a target. I even mentioned, look, peak A, peak B, peak C, peak D, peak E. Let me just put that in now so that we've got the picture nice and ready. And this is a pattern that for those of you who know the Chapman wave methodology and have been with me for a long time, to my opening call and also to my webinars, you'll know that a long time ago I did a lot of work. I did a study on the handle and cup formation. That's different to the cup and handle formation. It is the inverse. So look, here you've got a handle, and here you've got the cup. it invariably says, not always, but invariably says there's a very good chance. When I say good chance, I mean 78 to 85%. Sometimes it's almost 100%, but I'm not saying that here. There's a really good chance that unless the stock market really tanks, and I'm talking about more than 1,500 or 2,000 points down, where money comes out of stocks and goes into the so-called safety of bonds, so bonds are running and yields will come down, I'm thinking that there's a good chance with all the hurry and flurry and whatever is going to come up over the next 5 months or so, that the yields will in fact go right to this level right here, which is 37.44, 3.744. That is 8 points. That's another 3% higher. That's a big thing. So we're going to be watching this very closely. And look at the TYX, this is the 30-year, which is not as important. It hasn't broken out in the monthly yet. The TYX and TNX.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has just launched a Tiger Dollar sale for 1 weekend only. Through Tuesday, September 18th, you can get up to a 50% bonus on your Tiger Dollar purchase. Tiger Dollars never expire and can be used for any TFNN newsletter or service. TFNN has a new website launching in the coming weeks, and to celebrate, we're having a Tiger Dollar sale. For all the details and to get up to a 50% bonus on your Tiger Dollar purchase today, visit the front page of TFNN.com before this sale ends Tuesday.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So yeah, look at the 2-minute chart. It's taking all this time, and it's down at the 212 level, 2912 level. Same thing with the 5. Peak D in the 10 minutes, it's only just turning down right now. MACD hasn't crossed negative. Stochastic still at 83%, but have a look later on. Okay, so I covered a chunk of stuff that I wanted to do. It has to do with bonds. It has to do with, I need, as I say, free thinking. Let me go to the HGX of the housing sector. Look, housing sector is up $1.31, but look at that chart. It is just, it's gone nowhere. And the monthly chart has held around about the 9-period moving average, under it, that is, kind of sitting with a little closes, slides underneath the 14-period moving average. MACD's lousy, stochastic's lousy. So this is already a peak F in the HGX index in the monthly chart. And what's even more important about this is that it's gone from the 370, 369, 370 level down to under 300. And I'm really looking to see where the sign of strength is. I just don't see it. And yet, Home Depot is having a nice day today, up $1.17. I had to change the notation on this. I think that I have no choice but to call this an alternate count. Leg D in the weekly chart. That daily chart went to a peak D, then it's gone peak A, B, C. But for just the moment, I want to make sure that I make it clear that this can fail because the MACD is turning down, but it hasn't crossed negative. Stochastic's very negative, as is the unbalanced volume. So I'm watching this closely. It'll probably go back to being a C if Home Depot goes to 211.62 or something like that, just around that area. I'll say, hey, you know what? It's probably got enough strength to go to a leg D, and that's a bullish sign. We'll see what happens, but it's very important that Home Depot, we got to keep an eye on it because with the storms and everything that usually, we saw after previous hurricanes and major storms, that Home Depot did benefit. So we got to keep an eye on that. So I'm watching it. Now, meantime, back at the ranch, the IAI, which is this is the broker iShares, U.S. broker dealers and securities ETF. Lousy action, up 28 cents. Until I see this really start to move, Schwab, SCHW, nothing. There's nothing there. What about Ameritrade, AMTD, TD Ameritrade? It was looking, still the same sort of thing, IBKR, whatever that is. That's a broker, what is it called? Interactive Brokers. Lousy charts. Something's not right here. So I'm keeping my eye on various things. Maybe it's not good to look at too many things. So question about Boeing, this is our usual. Boeing up 4 at 360. Yep, it's still in the range. Now, the PPA, there's just no question about it. Completely wrong. I said I didn't think the PPA was going to go anywhere. I thought there was more peace coming. Well, I still think there's more peace coming. But wow. Call this leg E for now. In the daily chart of this is called the Invesco Aerospace and Defense ETF. So it's in leg E daily, leg E weekly, and it broke that rectangle formation. Your rectangles can stay a lot longer in a rectangle pattern than your patience. It broke to the upside, and it had 3 candles to the upside with that break. So this is the 4th green candle. This is good. This is leg F. Geez, this is a brand new A in the ABC. This could be, in fact, Chapman wave instant restart, a flat base restart. Wow, unbelievable. Anyway, I was wrong, completely wrong. No, I wasn't just wrong, I was just totally incorrect. I'm calling this F for now. It is at 61.48, up 39 cents after the doji candle of yesterday to gap up like this. This is good action. This is very good action. How long, I don't know, but it's good action. And if you look at, I had a question about Honeywell. We haven't looked at that for a while. I haven't finished the renotation of the daily. It did break out in the cup formation. So that's very important from the January high, around about 160, is at 165.67, down 8 cents, having made a leg E in the daily, leg C in the weekly. That says it should go higher. Honeywell's been an absolute superb stock for a couple of years now. It did have a big 165 to 140 consolidation, and that's what, 24 points. Is that right? 19 points. So it's now doing very nicely. Next question is UTX. I actually haven't looked at UTX for today. Wow, look at that. Up another $1.29 at 139.07. It is about to tackle the all-time high of 139.24 in the cup formation in the daily. That's still a weekly. It's still a leg C. in the monthly, that'll be a leg E. If it breaks by 1 penny above it, doesn't have to close, just to break it. That says to me that I've got to now consider, there's no question that I have to consider that the Dow is going to try to go to 26,616 now rather than later. I never thought that would happen. Thought we'd have a deeper consolidation. Wrong. But we're not there yet, but I'm just saying, if patterns repeat, this pattern in the monthly chart and weekly chart, it just happened over and over and over again. So there's no reason why we shouldn't expect that maybe it will happen. So another question is UNP, IYT, which I couldn't get yesterday, I got it today. IYT is up 79 cents, having made a peak E in the daily, a leg E in the weekly, and a leg F. There's that cup formation, broke out to a new high as well. So holding okay right now, underneath the all-time high that was made just 3 days ago at 209.43. It's 2 points away. So that's good action so far. Next question I have, UNP. UNP, I think, was acting better than the others before. Yeah. Oh, gaps up today. What a stock. A, B, C. This is leg D, new leg D in the weekly chart. I don't know what. Oh, leg E in the monthly chart. Outstanding action. And that, again, is a positive because it tells you that the transportation index, which is really the economy, that's how things move, trucking, rails, air, looking very good. Very good. Next question I had was, what sectors are working? Well, for subscribers to my opening call, we've chosen a sector. It's the steel sector. And that steel sector over the last 2 days has just been on fire. And one of the reasons is we didn't touch it for a long time because of the whole thing with the tariffs. But as it started to form a base just recently, last week, I was looking at it, and over the weekend, I said, you know what, this is looking very good. So we've been long, and I can tell you now, SLX, we've got that and a steel stock, which has done about 6% gain in the last few days. So this is trading, we're in under 42, and it's trading at 44.70. It has to pierce the 28th of August high of 45.50 to try to get to the 45.867 200 period moving average. Between 25.70 and 45.70 and 45, let's call it 40. That's a lot of resistance to get through, but thankfully the weekly chart has started to improve. I did this whole study. I showed my subscribers. There's the arch formation, Chapman wave inside wedge, 200 period moving average, trough D. If it continued higher this week after a really good candle on Friday, hey, I'll be back straight after this.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So Bob wants to know about Caterpillar up 2.24 at 148.46. This is nice action in Caterpillar. Leg C, strong technicals in the daily. Finally, well, it's not Friday. We've got to wait till Friday. But finally, you've got a crossover in the MACD of the weekly chart. That is big. So this makes it a gray leg B. But the stochastic at 44% has quite a way to go to be very, very strong. What I do want to look at here is, where was it? I was just about to do it. Oh, so yesterday while I was both trading and working here, I suddenly look up and I see a chart and I thought, did I send it out today? I was only going to send it out, I said to subscribers, I've been working on this chart and I'll only send it out Monday or Tuesday. And then I look, it looks exactly like the chart I had. Look, here it is. And I'm looking at this, and this is during Steve's show, Steve Rhodes, and I'm looking at the chart, and I see the same trend line. This is a chart I only show very rarely. Back in January of 2014, I said, are we here waiting for peak D? So if you go to January, right there, yeah, we got to that peak D right there. So I had started writing and writing. I did this thing. And then here it is. This is already back. The Dow closed at 26,154. That was Friday, right? Then Monday you get the strong dip. And you can see what's going on here. But let me explain what I'm looking at. And unfortunately, I was busy. I wasn't able to hear what Steve said. But I was fascinated because he had this long-term trend line. Most people don't use trend lines as long-term as that. So I'm looking at whatever he said. I'm afraid I'm going to just have to tell you what I'm thinking. So I have no idea if it corresponds or conflicts. If you go to the low of 1616, that's in the Dow. This is not the S&P. Or the Russell 2000 E-mini. This is 1616 on the Dow after the crash, October 19th crash. If you go to that low and you draw a trend line, that trend line through the peak C and D that was made back in June of 1999. Remember, you had those crazy things in 99. I was going to talk about, in this particular period, Trump really owns a lot of what's going on in the stock market. Most presidents have never really done that. In the Clinton years, you had, I believe it was right at the time, it was Robert Rubin. You had these guys that manipulated the dollar and did all sorts of things. You can actually see it happening intraday as the buying of the dollar came in, and all of a sudden would help the markets and the market would stabilize. And you know, all these crises that went on in that particular time. And of course, you got your 2000 all-time high. But anyway, what I am looking at is this trend line went right through exactly. I'm going to expand this to show you right here. So for subscribers, I'm still working on this because I needed to see if the Dow would make a leg D today or yesterday or today. So yeah, we've got that D and E right there. Look, it hits it exactly. In fact, it hits C and then 2 bars into D and then 2 bars into E, and then it pulls back that's the top of 2000 and market, 11,000 in the 11,000s, and then the Dow drops down to 71.97. October of 2002. So now look at this chart. Keep watching this chart. See the trend line. That's the reason why I've spoken about this so often. I've said that over the years, I learned, actually a long time ago, that when I used to hand chart, the long lines that I would draw eventually got hit. Even though I'd forgotten completely about them, I used to use this 36-inch ruler and all that because I had to add all these pages to make, when the Dow started to go up into the, this is going into the 97 crash. So that was important for me. So I had to add all these pages. And then in the 80s, of course, we got computers, and that made it a lot easier. So the 1987 crash is the one that soon after that I stopped hand charting. Now, look at this. You see the line? It's like when I talk about the 200-period moving average, you don't even care about the 200-period moving average. Why? Because most of the time when you go away from it, you go far away and you forget about it. And then one day it becomes focus, as we said just now, when I was talking about the rally or the decline of the different indices. Look, all of a sudden we hit this peak E right here, exactly. I mean, well, of course, there's a trend line. So if it has a fractional change from where you start your expansion, that tiny little degree, of course, escalates as it goes further and further out. But look at this. Bam, right there. And that says that there should be a high resistance level, and it depends what month, but we could start off by saying around about 27,250. That's where the trend line comes in. Let's see if it comes in this month. It would be 27,027, around about 27,000. So that U-shaped pattern is something that was very important, and I needed to see, will we go above the high of last week? Well, we just did it. Look, we just did it. So the reason why I held off is because instead of talking about what just happened, I want to talk about what can happen. So this is what we're looking at. And to see this U-shaped pattern hold that support level, that to me was unusual because look, in most of the other cases, it broke below it. And earlier on in the rally, it held beautifully. Now, I'll talk momentarily about channels because that's what I do in this particular analysis that I'm doing. Look at the steepness of that to that. And if we break out here, and at any point in the next few months, going into January or February, if the Dow breaks into the 27,800s or 28,000s, you start to increase almost parabolically the trend line support. So as I say, my eyes popped out. I said, wait a minute, I'm sure I sent out the chart. And why would it be on, hey, wait a minute, that's Steve's show. And I'm looking, and yeah, so I've got a little, I can't remember, if I recall correctly, with Steve's, somehow or other, he got it going right through this trend line somewhere over there. So so if you want to join it to that line there, you're going to go to the breakout. And that breakout was sometime in 2017, somewhere maybe April, May. So I don't know. This is my trend line. This is what I'm going to do. This is what I will do for subscribers. So I just wanted to go through that to say, what a coincidence. I mean, how often do we pull up charts like this with the same trend line angle? Interesting, huh? All right. So the 120-minute Dow, this is a new leg, an old leg E or a brand new A, but it is a leg D in the 120 in the daily chart. And look, here's the resistance. You see these automated resistances in the Chapman wave, 26,221. What did we go to today? We went to 26,239. Fraction above it, and now we're trading at 26,215. Then there's the next one at 26,306. That was the one that pressured that peak D to pull back. So you got another kind of a cup formation here. So it's going to be very interesting what happens over the next few days. Why? Because the Dow has been the strongest. The industrials, the XLI, let me just check the XLI as we go to our final break. XLI, remember tomorrow I'll do a half-an-hour show. XLI, I hit the wrong thing. There. XLI. Yep, leg E, the daily. Leg D in the week.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Don't forget, Steve coming. Oh, I think Steve was recorded today. Is that somebody said? Okay, anyway, don't forget Steve coming up. And then if he is recorded, it'll be Jason. I'll be on tomorrow at 8 to 8:30. And then, of course, you've got Dave White, you've got Tom O'Brien. So full day. And don't forget the final day of the sale. Big sale going on, 50% off. Now, let me just do this real quickly. High-grade copper. High-grade copper is having a very good day today. That is important. A nice, strong, it goes from under 2.6 to over 2.7, to 2.7365. Let this continue. That's going to be very important. But in the meantime, it's got the lowercase h going to a lowercase m, but it is a leg C in the daily. We'll see what happens by Thursday. These a couple of days here. Lumber, LB. Lumber is at LB. Lumber. I'm not getting it. All right, I don't know why. But let's go to SB. I'll just jump around here. I want to show you something very interesting. Look, sugar had a peak D. That's how important these Ds are. Look, peak D in the daily, doji candle, and it goes right from the 1180 down to the 1050s. Let's see, the other one was corn. Look at corn? This is the symbol corn, CORN. This is the ETN. A nice rally here. It's made a peak C at 13.39. I think it's going to try for 13.40. It's going to try for a leg D, and that'll make a leg D in the weekly as well. Monthly isn't a leg D, so this is going to be very important for corn. Must hold 9. It's at 11.89. LE. I was LE. What is LE? No, it wasn't LE. All right. Well, enough for those. I'll do them again tomorrow. But what I did want to say is the VIX index, VIX.X, VIX index, VIX.X. There it is. Trading at 12.89, down 79 cents. This has just been stuck under the 200-period exponential moving average for a week now. And this is going to be very important because at any point, if it goes from 12.89 back into the 13.5, 14 area, that's when this market becomes vulnerable. So we've got to watch this real closely. And as far as I'm concerned, this is a really important 2-3 days because how high the Dow goes is going to be dependent on whether it is able to get to, I put CRON instead of corn. This is Cronus. I think it's Cronus. It's the wheat stock. Doing very nicely.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
David White's newsletter, The Technology Insider, is focused like a laser on